Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, September 16th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low, and a candle that's made that by opening up a window, so a lot of enthusiasm early in this market at the opening. A fairly large white body candle suggesting that the buyers have made a significant amount of net bullish progress, and certainly much larger than the previous day's trading, so some strong upside momentum in net terms. But if we look at the large shadow on the top, this highlights the market being rejected from the round number 1700, and that's quite typical for markets to do that around round numbers, and this is quite an important round number. The shadow represents the buyers losing commitment up around that level. But we've also seen the buyers fail to take control of the market. They haven't closed up towards the high of this candle, and they've closed around their midpoint level, suggesting that neither side has really taken control. So not the type of candle that we'd like to see approaching this level, and certainly suggesting that the market may not actually trade up to the 1709 level in this first time frame downtrend, expecting that the market may come off and find support around the window that was opened or around the 1687 level, and then bounce off and then perhaps have another go to the upside. But if you look down below where the market's trading at the moment, there is so much solid support all through a very large range. The cloud, we have a couple of windows that were opened and a window that's still open here down around the 1674 level. We have the Kijun-sen and the Tenkan-sen, this large highlighted yellow zone extending down to 1636, and the cloud extending all that way down to around the 1635 level. So very, very solid support down below through many levels, and the only resistance that the market here faces at the moment is this 1700 level. And if we see a bullish close up above there, then it's likely that the market will test to the important high at the 1709 level. But reading the short-term dynamics at the moment, with the buyers failing to maintain control of this market, it does suggest that the market may not do it in one go. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend to the previous time the market is trending up, and if we look at this first time frame uptrend, it's been in existence for quite some time, and this is really quite amazing when we consider that trading from around 1628 all the way up here through to around the 1700 level, all in a first time frame uptrend, with the market making a series of higher highs and higher lows, obviously with some inside days and borderline inside days in between, but no change of trend technically to the downside in all of that period. And here we have the market now approaching up towards the 423.6% level, which is at 1708. There's a possibility the market could test up to there, and if we see a rejection, but really the extent of this trend really does say that this market is looking a little bit overextended, and wouldn't surprise to see the market come off to a degree. In terms of the Fibonacci retracement, we're in an expansive mode of that. The market is trading up through the important 161.8%, 261.8% levels in a bullish manner, and today we've tested almost exactly to the 423.6% level, being rejected from it. This suggests that there is a very strong possibility of a change of trend, so we are looking for a potential lower high and lower low in this market. In terms of Ichimoku, obviously a bullish market in the long-term time frame. We saw the bullish breakout, and a very solid bullish breakout up above, giving us a buy signal with Ichimoku, when we have seen follow through the market trading up through the important 1687 level, through this window that was opened up, and establishing another window today after this small amount of congestion that we saw around the 1687 level. So a bullish market in that long-term time frame. In the medium and fast-term time frames, the market's trading above the Kijun-sen, the pink line, so bullish in the medium-term time frame and bullish in the fast-term time frame by trading above the Tenkan-sen, the green line. We had a crossover of the Tenkan-sen above the Kijun-sen today, and that is another buy signal with the Ichimoku charts. It occurred within the cloud, so it's a neutral signal. It's not weak, it's not strong, it's in between, so we can have some confidence in this signal. Not as much confidence as if the crossover occurred above the cloud, but still relatively not the weakest signal that we can have. And looking across at the Chica span, that's within the current price action, so it's telling us that we don't have negative momentum, we don't have upside, so neutral. So not supporting what we're seeing in the long-term time frame, but suggesting that if this market does trade higher, close higher, we could see a change in that Chica span, and we could see that confirming the bullishness that we're seeing. And I think that probably really hinges on whether this market can close up above the 1700 level. So moving forward, obviously the trend is still up. We've had this large rush of enthusiasm today at the open, with the market trading up above the previous high, opening this gap or this window. The window now has the opportunity to hold as support for this market if it does come off, but we also have very strong resistance up around the 1700, and crucial to this market going higher is this level. What we'd like to see is a bullish close up above there, and then a test up to around the 1709 level, but very, very solid support down below, as I've already mentioned.